Ladies and gentlemen, Greg McCloskey from ForexLive.com with a Forex quick look. I'm going to take a look at two of the major currency pairs, the Aussie versus US dollar and the New Zealand versus US dollar. Today's date is July 31st, 2024. Let's get started. Some fundamental news is driving the Aussie versus US dollar. First, the CPI data came in weaker than expected, I should say the core CPI out of Australia for the current quarter came in weaker than expected, and that sent the Aussie versus US dollar to the downside. Further to the downside, it's already been moving sharply lower over the last few weeks of trading. That move to the downside took the price out to this swing area down through here between 0.6475 and 0.6486, and we found a stall against that area right in between that level. This level is defined by a number of different swing lows and lots of different swing lows, I should say. In this area right through here, you can see where it was a pretty decent floor here. Yes, we did move below it here, but most of the lows were here before moving to the upside here. We did fall below the level through here, extending down to this toward this low right here, but then bounced back higher. And although the price did move above the level, we rotated back to the downside here, and then started to move above it. Got a little wonky here before taking off to the upside right here. It wasn't until today that the price moved back toward that level and found support buyers against that level. Now, the move back to the upside has been helped by the U.S. employment cost data, which came in a little bit weaker than expectations ahead of the FOMC rate decision. Will it sway the Fed a little bit more to the, be a little bit more demonstrative about their the September meeting? The market already has a 100% chance of a September cut. Can't get any better from the market standpoint. But will the Fed be a little bit more open about the idea of a cut? The move to the upside has now found resistance. Trying to find resistance against the underside of this broken trend line. Also, the 61.8% retracement of the move up from the April low to the July high is in play at 0.6528. If we start to see more buying above this area, we could see a rotation back toward this key cluster of resistance, inclusive of the 50% midpoint. The same move to the upside. The 200-day moving average at 0.6587 and the 100-day moving average at 0.6603. So between 80 and 03 would be the next key target on the top side for the Aussie versus US dollar to get to and through. If we're able to get above the 61.8, get back above this trend line and start its rotation back to the upside for the Aussie versus US dollar. So key point right here, reflection, deflection, key level for both buyers and sellers, however you want to put it, right here near the 61.8 at 0.65283. Let's take a look at the New Zealand versus a US dollar next, and we'll look at the 4-hour chart for this currency pair. And we bottomed earlier this week right near the low price for 2024 back here near the 0.58515 level. As you can see, the low price came in at 0.5856, just about 5 pips short of that level, and started its rotation to the upside. We've seen continuation moves higher. Let me just zoom back, take a broader view of this to get a better view of it. And we are starting to move above this swing area. Now, this swing area goes back even further than what we see on the chart right here. Go back all the way to this area right through here. You can see how it was a resistance. We broke through that level and then used that level as a resistance and then support before moving to the upside. Another support, resistance right here. Got a little wonky. I wouldn't say it's the best technical level, swing level that I could put on a chart, but it's worth something. And we did stall against that level, but now moving to the upside. It looks like the 38.2% retracement of the last move. This last move to the downside comes in at 0.5970 area, and that's the next target on the top side with the current price trading around the 43 level. So further momentum to the upside would move up toward that level. Let's just take a look at the hourly chart for giggles here. And if we look at the hourly chart, we not only moving above this swing area, but also back above the 200-hour moving average. That's the green line in the chart. No wonder we're seeing further momentum to the upside. The last time the price traded above the 200-hour moving average was way back here. That goes back to like July 12th or thereabouts when the price gapped below that level off of the weekend and haven't been back since above that level since that time. So there is a reason to like the New Zealand versus US dollar in the short term. We'll see if the price can stay above that 200-hour moving average at 0.5929 294. I like that better than the swing area as your risk level, as long as if we can stay above that level, then the potential to move up toward that 38.2% retracement of this trend move to the downside is a possibility. As most people know, I like to see the price get above the 38.2% retracement to show that the buyers mean business. So we are a little bit of ways away from that level with the current price trading around the 43 level. But, it's only 23 or so pips away. So that certainly is a target area that we can aspire to get toward, as long as the price stays above the 200-hour moving average. So that's my technical look at the Aussie versus US dollar and the New Zealand versus US dollar. My name is Greg Michalowski. Good fortune with your trading. Bye-bye now.